Hi everyone, welcome to another Weekly Forex Forecast for the week ending July 31st, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the dollar versus the yen, and we're going to wrap things up with gold and silver. I thought it only fitting to cover both gold and silver this time, given what the precious metals have been doing over the last week. Alright, so let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up we have the EURUSD, and I know a few weeks ago everybody thought I was crazy for buying this one down here with an average of 112.99. So I was actually scaling in through this area after the pair broke above this descending channel, which as you know was acting as a bull flag. So we had this rally back here, we had the consolidation, we had the close above on this channel and retest of that area as new support. So through this area, I was scaling into a position and my average ended up being 112.99. And sure enough, I still actually have that position on. My original intent was to take profit at 116, and that was based on this monthly wedge pattern that I've been talking about now for months. So the year-to-date low down here at 2000, you can see how this wedge pattern has directed the price action here for the last 20 years. So my intent was to take profit at 116, which was the top of that wedge pattern as well as a key horizontal level. However, I still have the entire position on simply because of how Friday closed. All right, so you can see where the pair did encounter some selling pressure right here around 116 last week. However, look at Friday's close. We closed well above that area, just above 116.50. All right, so for the week ahead, 116 becomes support, and it's going to get really interesting because we are coming up on the July close, and we're also testing the top of that wedge pattern. So if the EURUSD clears that 116.50, perhaps 117 area this month, that could send the EURUSD much higher, all the way up here to this swing high around 125. And a few months ago, that would have seemed unfathomable, but here we are. All right, so if the EURUSD breaks this area on a monthly closing basis, keep an eye on this swing high from 2017 at 125. Now, of course, if we do see a rejection from the 116 to 117 area this week and the pair does go and close back below 116, I'll be out of that long position from 112.99. All right, I'll go ahead and take profit if we do close below 116 on a daily closing basis. But all in all, this has been a fantastic trade, so kudos to those of you who kept things simple and stayed the course. Next, we have the pound versus the US dollar, and this is another major that has played out nicely as we had a break above this trend line that I've mentioned for the last couple of weeks. So this trend line, which extends from the 2019 high, I was saying that the pair had to get above this area on a daily closing basis to expose higher prices. You can see where we had the close right here on this candle. The pair even retested that trend line as new support right there, and it then rallied over the next couple of days for a move up into the 128 area based on this swing high back here. So if you'll remember, 128 was the next target if the pound had closed above that trend line, which it did back here. So moving forward, the same rules apply. We need to see the pound close the day above the very top of this swing high back here. So I would put that level as high as 128.15. Okay, so if we see the pound close the day above 128.15, look for a move up into the top of this ascending channel somewhere around the 130 handle. So notice how we have this ascending channel back here that is still very much in play. So if we just look at the last few months, notice how we've had this swinging action within this channel. So what's yet to be seen is whether or not the pound can retest the top of that channel up around 130. Again, it's going to take a close above 128.15 in my opinion in order to expose that 130 area. Alternatively, if we see the pair rotate lower from the 128 area and give up this trend line that extends from the 2019 high, that would signal weakness and could expose the bottom of this channel just above the 124 handle. So I haven't mentioned the dollar yen for a while, and for good reason. If we look at the daily time frame here, there is absolutely no direction. We've had a lot of choppy price action through this area, and again, there is no momentum. We're just going sideways here. And that's why for today's forecast, I'm not even going to look at the daily time frame. Instead, we're going to take a look at the monthly time frame. And if you've been following me for a while now, you know that this is the wedge pattern that I've been talking about now for months. So ever since this March volatility, the pair has been respecting this wedge pattern on a monthly closing basis. So before it looked like we could play this on a weekly closing basis, but if you look at the weekly time frame here, and I'll go ahead and do that, you can see where the dollar yen is not respecting this wedge pattern on a weekly closing basis. Notice how we've had weekly closes above this pattern. Okay, so that's an indication that the weekly time frame is no good here. We need to play this on a monthly closing basis. So notice how no month has closed either above or below the wedge. We had several attempts back here, but every single month closed back inside this pattern. And it just so happens that last week tested the 106 handle, which is the bottom of that wedge pattern. If you go back and look at my last post, 106 was the support level that I pointed out for the bottom of this wedge. So it's going to take a monthly close either above or below this pattern in order for the dollar yen to break out. So given that we have one more week of July, it's fitting to talk about the dollar yen now, because if we see July close below that 106 area, this is a pattern that could send the market much, much lower. And the reason for that is look at when this pattern started. The inception point of this wedge pattern is back here in 2013 and 2014. So you're talking about more than 5 years of pent-up price action that has just been coiling for a move either higher or lower. And again, if July closes below the 106 area, that could send the dollar yen much lower to test this March low as well as some of these lows from back here in 2016. So if I get a little more specific about that and draw a level there, you can see where the 101 area would be a key factor if July breaks below 106. So notice back here, 101 acted as resistance, and then support through here, support once again through this area, and then of course the March low. So the bottom line is look for where July closes. If July gives up that 106 area, we could see the dollar yen move into 101. And that of course would be a 500 pip move, which for a pair like the dollar yen would be significant. But it all hinges on July's close. If July closes back above 106, then this wedge pattern remains intact and we have to wait for the next month to close either above or below this pattern. And I know some of you have criticized me about waiting on the sideline for this one, but again, if you look at the daily time frame, there is absolutely nothing to do here. There is no favorable setup. I mean, sure, there is a support level down here and there's some resistance up in this area, but this is not the type of setup that I like to trade. Even if you had gotten long down here or short up here, look at how choppy the dollar yen has been through this area. All right, so that's not something I want to sit through. I want something with momentum like the EURUSD, which is what I've been trading. So for me, the monthly time frame is where it's at, and a July close below 106 would open up the 101 handle. Okay, so it's time to talk about the precious metals as part of this week's forecast. And first I want to talk about gold, which has been on an absolute tear recently. So going back several weeks, we had this consolidation between 1680 support and that 1750 resistance area. All right, so we caught the breakout here on this candle, and I even mentioned how the pair retested 1750 as new support. A 50% retracement of this pin bar right here would have got you in on these candles, and that worked out nicely. You can also see where we broke above $1,800 on this candle, and $1,800 then became support on a daily closing basis. Now, just in the last week and a half or so, I mentioned how a close above 1815 would send gold higher. And look at what happened on this candle. All right, so you can see where this range was intact for several sessions between $1,800 and $1,815. Now look at this close right here. This candle closed above that range, and sure enough, the next few days took gold much higher. In fact, I even said back here that a break above 1815 could send gold on a $100 move. So that implied a move into 1915 or thereabouts, and gold is only about $15 away from that target. Now, I do expect to see quite a lot of selling pressure at all-time highs just above $1,900. However, I don't think that gold is done here. I do think that we're going to see a break above all-time highs for gold. We could see some consolidation between 1915 and perhaps 1875, or even a pullback down here into 1815. But either way, even if we see several weeks or even months of consolidation up here, I do think that we're eventually going to break above all-time highs, which leads me to believe that we'll see a run at $2,000. Now, why $2,000? Simply because it's a big round number. And once we get above all-time highs around 1915, there isn't a whole lot to go off of, which means I have to rely on round numbers like 2,000. So unless you're a member, you probably don't know that I've been buying the gold miners ever since April 1st. So ever since this area back here, I have been buying the junior gold miners, and I believe as of Friday's close, I'm up about 128% on those. So I actually liquidated all of my stock positions back there, which I mentioned to members, and I bought gold miners. So they've been doing incredibly well, and I expect that trend to continue. So for those of you in the US that can't trade spot gold, there are other ways to play it, including the miners. All right, so that's just what I've been doing. You, of course, have to make your own decision, but I do expect this trend to continue. We could see a pullback from 1915 into 1875 or perhaps even lower, but I do think that gold is going to eventually break its all-time high and head to $2,000. So last but of course not least is silver, or XAGUSD. And there's nothing else to say here other than silver is breaking out in a big way, and I expect it to head much higher. So I want to start out with the monthly time frame, where you can see how silver has broken above this descending channel, and we've also cleared that $21 area. So this is a chart that I actually posted to members back when silver was trading well below this channel, and I said that silver looked like it was on the brink of breaking out. I also talked about this on the blog, where if we look at the daily time frame, you can see how we had two wedge patterns that developed along this uptrend. So I mentioned this second one on the blog and said that $1,800 was support, and that as long as that held, I liked the idea of a move up into $1,900. I then mentioned silver back here at $1,900 and said that the next stop was likely $21. And sure enough, we got that last week. And of course, silver closed just above the $23 handle. All right, so where do we go from here? So if we look at the weekly time frame, I like the idea of $21 becoming new support and $26 becoming resistance. So if we look at that monthly time frame, you can see where $26 was support back here for several months. That's why I do think that sellers are going to try to defend the $26 area, but I do think that moving forward, $21 becomes support. And that's just based on the high of this channel back here. However, given the parabolic move that we've seen recently, I'm not even sure that we'll get a pullback to $21. We could just consolidate sideways here for the next few days before pushing into $26. So if we look at the intraday time frames, all right, let's try to get an idea of what's happening here. And honestly, I think that if we break this high right here, so we're looking at the 4-hour time frame, I think that if we start to break above some of these highs around $23.20, I do think that could send silver toward the $26 mark. All right, and that's simply because of the momentum we've seen here, where I don't think we're going to get a pullback into $21. Now, it could happen, but if we do see silver break above $23.20 on a 4-hour closing basis, that could be enough to expose the $26 area. But all in all, just like gold, I like playing this one with a longer horizon, which is why I'm playing it via the miners. So just like gold, I've been buying silver miners and they're doing incredibly well. So moving forward here, you can see where $21 is support. If we do see silver break above $23.20 and hold above it, that could expose $26. But over the next few years, I do expect a run up toward the $35 mark, $44, and eventually all-time highs at $50. I know that seems crazy right now, but you have to remember that once silver gets going, that it can move very, very quickly. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.